All right, so this is 3-1 work together, and we have this commissions report, and I put some information in already. You'll get the instructions here, so let's bring these instructions up. And what you'll see is we're working for a company called Coastline Flooring. They have a pay period July 3rd, and the pay period. This is when we're going to be paid. We're filling out that, so we'll fill that out. Just like our notes, we'll put that in the payroll register. They gave us a blank earnings record we have to work on. We got a bunch of information here. Deduction for employees, 2% um, of total earnings will be state tax, 6.2% Social Security, 1.4% Medicare. No one's over the threshold of um, the tax base. Okay. Um, we need to save our work so we can complete the next section. So make sure when we're finished, we got it all completed. It says prepare commissions for our employee number 12 here, carpet department, June Nigella's biweekly salaries, $1,200. You get 4% commission for carpet sales, 2 for net sales. She's in the carpet department, that said. Okay. Commissions for the previous month are paid of the current month. All right, so we got to figure this out. So this information and this information is put here. Her jobs department manager, all this stuff, all that, all these numbers are given to you here and here. Okay, that's where we're getting it. It wants us to complete this commissions. So when we're completing this, we're going to add the sales on account plus cash sales to get our number. Okay, for carpet there. We're going to do the same for tile, and we'll get these numbers. So those are total sales. These are the discounts returns that we need to subtract. So we need to get a total of all the items, the sales, discounts, returns, and allowances. We need to get totals for these. Okay. So we're given these numbers. We added these two up. We added these two up. We added those two up. Now those two up. So now this is the number for carpet sales. We have to subtract the total reductions in sales from sales, discounts, returns, and allowances. So then we get an updated number that is there for our net sales for each one of these departments. Taking this number minus this number to get our net sales. We multiply that by the 4%, and I think you got to type 4.0, 2.0 to get it going. At least I did. I typed some of this in earlier just so that it wouldn't be such a long video. And you can pause and do whatever you need if you need to. So how we got 4%, 8, or they gave it to us. Excuse me. They gave us the 4% for the employee for this commissions, and this commissions is 2% for tile. We multiply the net sales by the 4% to get the commissions. We multiply net sales of tile times 2% commission to get that. We add those two up to get total commissions. Okay, that is what we did when we prepared our commissions record. All right, nothing too terrible. They give us the information here. They give us the information here. We set it up, and we have to add a couple numbers, subtract, multiply, and get the total. Okay, so that's part 1. They have this part in here, but it's part 4. See what I'm saying? This is up here, part 1. This is part 4. So we got to go back all the way down to do part 2 and 3. Okay? It says prepare the payroll register. So line 5, we have this information. This is supposed to be another dollar sign instead of not. But this is what I put in. So I already put her name in and then his name in for this 8. And we put the information in for her. $1,200 was her salary. She made $411, if you remember, which we just figured out, in commissions. So that's where we're getting that. This is the number she got in her salary. They told us that. Or I had it up here, right? biweekly salary department manager, you got $1,200. So we put that salary number here. This is for the first employee. The commissions, we get a total. What is this number? 1528. That is the number that she made in the department for carpet, $1,200 for her salary, plus the carpet department commissions. That is where we got the departmental pay of that. Tile is not her department, but she did make a couple sales and had commission. She's part of the commissions part of that. Her salary doesn't come out of that. It comes out of her carpet department, but as manager, she gets a percentage. So that is where that number comes from. Nothing with administrative. And so then I filled in the blanks. What we're going to do is do that part for Andrew. So what we did is we took the total, 1,611, looked it up in the, married, single chart, state income tax, multiplied that number times 2%, Social Security times 6.2%. They have all these percentages given to us. Total earnings times these percents. And we're going to do that for Andrew real quick. All right, so we got to figure out what the heck's the deal with Andrew. So it says here, Andrew has a regular salary 16 hours. He's employee number 8, single 1. Okay. So we need to find out his regular pay. $16 an hour. He worked 80 hours. So you take the calculator, wherever that shows up. Okay. $16 an hour times 80 hours. We get 1,280 hours. So that is his regular pay. So we put, 1,280. To show you, I'm going to have to keep clicking on that. Okay. Oop. 1,280. Didn't show up. All right, sorry. All right. Now, overtime. Does he get overtime? He works 6 hours of overtime. So he works 6, you get paid $16 an hour. He works 6 hours of overtime. So you take 16 times 6 times time and a half, his hourly rate for that time, and he made $144 in overtime. Okay? So his total, he doesn't get any commissions. He's an hourly employee, so he doesn't get anything. So his total is these two numbers added up. 1,280 plus 144 is 1,424. We will use that number a lot. Okay? It all goes under tile. He's in the tile department. He's a clerk. So all 1,424 goes underneath the tile department, so we can keep track of who's getting paid from this, what department. Nothing to do with administrative again, so that's that. All right, so we're going to be taking that number, 1,424, and then we need to figure out the tax of that. Okay, so here's the taxes, the tax table. And I put a copy of that in your deal. So again, single with one allowance. And we're going to figure out, we're taking 1,424. So single with one allowance. Oops, I didn't mean to click that. But you can, that might help. Okay. Single with one allowance, 1,424. And we go over, and it's $128. So we would write 128. And again, if you didn't see that, I guess I went pretty quick. We take the 1,424 number, so it's at least this, but less than that. We're in the single chart, and we go over to one allowance, 128. Okay? So that's why we put that there. State income tax. We take 1,424 times 0.02. And we get 28.48 for state income tax. Why did we take it times 0.02? It says up here, deduction 2% for total earnings for state income tax. We deduct 6.2% for Social Security. So we take 1,424 times 0.06 right? 88.288. So what does that mean? We need to round to 88.29. Medicare, 1424 times 0.0145, 1.45%. You get $20, and you got to round that again. 65 cents. Round that to 65. Okay. It says down here that he puts $50 away for a health insurance premium that gets deducted and gets $60 in retirement plan. So I gotta get rid of this so you can see this a little better. So we said it's $50 for health and premium, $60. These are all deductions, right? They fall under the deduction. You add all those up. I already put the number in, so you didn't have to waste time. This number is the total of this number plus this, plus this, plus this, plus this, plus this, plus this. Or it equals that. How do we get net pay? You take total pay, total earnings, minus the total deductions to get net pay. So you would do the same thing we just did for Andrew for this employee. You got the 1,200, you got the commission, you got the total. So you would be taking it times the total earnings. So everything would be times 1,611.42. So you look that up in the married chart. I'll get rid of this. Sorry. Okay, married chart here. It'll blow up a little bit, and then be married, and you would look on 1,611 if it ever shows up. You go to 1,611. Is that married? And what was it to say it was? Over here and 2. Yeah. Okay, good. Yeah. 1,611, and married with 2 would be this 88 right there. And that's what you got there. So that's how you do that. And then you just multiply 1,611.42 times all those tax rates to get those. Okay? So those are the next two parts. So we do the commissions record, then you got to figure out each employee, you got to put their employee numbers for merit allowance, regular overtime, commissions, get their totals, put them in each department. No administrative fees at all or pay here. So then you figure out all their taxes. You get their total, subtract it from the other total, from total earnings. Total deductions equals net pay. I gave you the totals here, so you didn't have to waste your time listening to it. You got them there, so you don't have to add them all up. Put totals here, and that's 2 and 3. But in the instructions now, they ask you to do part 1 through 4. The fourth part is prepare Andrew's earnings record for the quarter ended. Accumulated earnings are 18,240. Okay. So they got the dates and all that on here. So part 4 is here. Okay. And that's what we're looking at. So when you're looking at part 4 and trying to complete this with Andrew, okay, we need to do a couple things. So this stuff was all part of his employee record. One allowance, singles, name, hourly wage. He's not salary, so nothing's there. He's in the title department. He's a clerk, and it said September 30th. Okay, we got, I think I picked the wrong one. Yeah, there we go. July 3rd, I believe. And what we found out down here was that his total earnings was 1,424. So you put 1,424. And then all these numbers, federal income tax, state income tax, social, all this stuff comes directly out of here. 128, 2848, 8829. You put all those in there. And then you put this number, 1,048.58 is the net pay. 1,048.58. So you're just copying those. I didn't want to type all those in. It takes too long. But you get them from down here. You figured them all out, and now you put them up into this file. It's the employee earnings record. Accumulated earnings is not adding net pay. Accumulated earnings is all the money you make prior to deductions. So 18,240 plus 1,424 equals the accumulated earnings. And there you go. That is how you do the work together.